There's a huge investment shift happening literally right now. It's this great rotation of money, moving out of the digital world and pouring into the physical one. So let's get right into it because honestly, getting your head around this shift, well, it could completely change how you think about your portfolio for the next 10 years. Okay, let me ask you something. Do you ever get that feeling you totally missed the boat? You watched that huge tech boom over the last decade just from the sidelines. Saw all these regular people making absolute fortunes on stocks you'd heard of, but just never pulled the trigger on. It's a super frustrating feeling, right? But what if I told you the next big wave, the next huge opportunity, is only just getting started? Yeah, that's right. This next big wealth wave, it has nothing to do with pixels or fancy algorithms or whatever the next hot social media app is. Nope. It's about something way more fundamental, something you can actually, hold in your hand. And believe me, that's where the real opportunity is right now.
So this great rotation I mentioned, what exactly is it? Well, it's the big idea behind this whole explainer. It's this massive pivot of investment money, basically a U-turn away from all things digital and straight into the physical world.
Just look at this. It's like a tale of two decades, right? The past 10 years, that was all about digital stuff. You had your AI stocks, crypto, NFTs, the whole shebang. But the next decade, it's going to be all about tangible assets. We're talking about the actual stuff that builds our world. Things like copper, lithium, and, this is the really crucial part, the shipping industry that has to move it all around the globe. So you're probably asking, okay, but why now? What's the big deal? Well, it's because we're standing at the very beginning of a huge long-term boom. And it's being driven by this absolutely unstoppable demand for physical stuff, for commodities. Let's just look at some of the numbers and you'll see what I mean. All right, let's start with copper. Get this, a single electric vehicle needs 5 to 6 times more copper than your standard gas-powered car. I mean, just let that sink in for a second. Every single EV that gets built, it just cranks up the demand for this one critical metal like crazy.
And here's where it gets really interesting. Because of that insane demand, not just from EVs, but from renewable energy, from AI data centers, we're looking at a projected 30% shortfall in the world's copper supply by 2030. Think about that. Basic economics 101, right? When demand just blows past supply, well, prices really only have one direction to go, up.
And hey, it's not just copper, not by a long shot. Look at lithium. Just to meet the demand for EV batteries, just that one thing, global production needs to literally quadruple. So again and again, we're seeing this incredible pressure on the physical stuff, the actual building blocks of the economy of tomorrow. Okay, so we have all this demand for copper, for lithium, for all this physical stuff. But here's the million-dollar question. How does all that material get from a mine in, say, Africa or Australia all the way to a factory in Asia or Europe? Well, that's where shipping comes in. And this is so important. Shipping is the critical bottleneck. It's the absolute linchpin of this entire tangible asset boom. And that might just make it the single most powerful way to invest in this whole trend. You know what it's like? It's like trying to get an Uber in the middle of a rainstorm right when everyone's leaving a concert. Surge pricing goes through the roof because there just aren't enough cars. Well, that is exactly what is happening in global shipping right now. You've got this huge surge in demand to move all these commodities, but it's crashing into a very, very limited supply of ships. And just like with that Uber, when there aren't enough ships to go around, the price to book one, it just skyrockets. Yeah, just look at that. That one word says it all. Scarcity. That is the new reality in global shipping. And I have to stress, this isn't just some temporary glitch or a short-term problem. No, this is a deep, structural issue. And the reasons why, well, they create what you might call a perfect storm for investors. So why is everything so scarce? Well, it's a few things all hitting at once. First off, the number of shipyards around the world that can actually build these massive vessels is way down, like 30% down from where it was. So we literally can't build new ships fast enough. Then, even if you want to build one, key parts like the new fancy eco-engines, they're back-ordered for years. On top of that, the ships we do have are getting old and need to be replaced. And to cap it all off, you've got all this geopolitical chaos forcing ships to take much longer routes, which ties them up and basically shrinks the number of available ships. It really is a perfect storm. Okay, so the opportunity here seems pretty clear, right? The big question is, how can an ordinary investor actually get in on this? Well, we can actually look at a pretty simple playbook here with two main strategies. Let's break them down. So you've basically got two main ways to approach this, depending on what kind of investor you are. First, there's what you could call the yield fortress. This is for the person who wants steady, reliable cash flow. A good example might be a company like Ocanius Eco Tankers. They've got a modern fleet, and they pay out a really strong dividend. We're talking something in the ballpark of 8 to 9%. Solid income. Then, on the other side, you've got the capital compounder. This is for the investor who's playing the long game, looking for growth. Think of a company like CMB Tech. They're pouring money into developing things like hydrogen and ammonia-powered engines. The dividend is lower right now, sure, because they're reinvesting everything into this wild, future-proof tech. But the idea is they're setting themselves up for potentially massive growth down the road. So, see? It's two totally different ways to play the exact same trend.
All right, so let's tie all of this together. If there's one single big idea you should walk away with from all this, what would it be?
It's this. The whole investment thesis boils down to scarcity over abundance. Think about it. For the last 10 years, all the smart money was chasing digital abundance. Infinite copies of software, endless data. But the next decade, it's going to be all about physical scarcity. And the companies that actually own the scarce stuff, the tangible assets, and crucially, the infrastructure that moves that stuff around, those are the ones that are set up to win. Big time. And that really just leaves us with one final, pretty important question you should be asking yourself. This great rotation, this huge shift from the digital to the tangible, it isn't some future prediction. It's happening right now. The only real question left is your portfolio prepared for it?